Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It's Wednesday. Compared to yesterday, it was really dull as kind of more stabilizing type of a day after the volatility that we've seen. We did see a little bit of selling late in the day, but compared to what we've seen, certainly not a whole heck of a lot. One of those more mellow type of days in the market that we were so used to back in April. On the earnings front, and hey, Scott, and welcome out, everybody. Good to see you, Scott. Hope you're doing well, my friend. I hope everybody had a great day, both in and out of the market. It was, especially compared to yesterday, it was like watching paint dry, right? So it made me feel a little bit more comfortable about this as a pullback opportunity. Still lean that that's what it is. I'm not going to be the first one in, though. And hey, and hi, Patricia. Good to see you. I hope you are doing well. On the earnings front, not a particularly busy night, but we do have Disney reporting here tonight after the close. Looked like, first glance, it was an earnings beat. They did beat on both earnings and revenue. And of course, that is about as far as you can get right before the market recap, because nothing else is out other than the initial numbers. So looked like it was a beat. It was up a little bit in the after hours, like 1.7% or something like that, but probably not a bad thing for the bulls to have, Disney at least show some decent earnings. Maybe that will get them excited. Beyond Disney, just a handful of S&P 500 companies coming out either tonight or tomorrow. You have about a half dozen both after the close and before the bell here tomorrow, but more of the smaller size S&P. It's all relative, right? You have Fox, CenturyLink. I don't even try. I know Alb. I just call him Alb. Albemarle, I don't know. I probably shouldn't have tried. Coming out here tonight, and then tomorrow before the open, BDX, a couple of utility companies, and Duke and Amerid. So not a particularly busy name. Cardinal Health, that might be an interesting one though. So we've about made it through earnings. Here we are on, good afternoon, Ed. Good to see you, buddy. Here we are on the S&P 500. We had that nice surge at the end of the day yesterday, on the 15-minute chart. Really was able to carry through into much of today as we just kind of crept up slowly and cautiously, maybe throughout the course of the day. Then the last half hour of the market day, almost the exact opposite of what we saw yesterday. To me, probably, who wants to hold these short-term trades overnight? I don't know. In this type of a market, if I'm doing some short-term swing trading, I'm not afraid to be thinking about day trading right now. So we did see that to close us off here this evening, not really going anywhere. Most probably, importantly, in my mind at least, still hovering above that 50-day moving average on the S&P 500. That's a key area in my mind. That's kind of the big one that I'm looking at as I'm watching this retrace. I still do believe that that's most likely what we're looking at here. Certainly, I was thinking maybe earlier in the day we were going to be able to actually say, brave traders might be getting in tomorrow on the pullback. They still might, but not this brave trader, as if that is who I am anyway. But we were able to hold above this 50-period moving average. So not a whole lot of overall movement. Still just think we want to see how we develop in the next couple of days. This is certainly going to be giving us an opportunity for a pullback if we want to take it. I think we want to be cautious, but I do think it's okay to be thinking about it if we can slow down. Another day like this would make me feel a little bit better. There's no doubt about that. On the other side of it, still below that 50-day moving average here on the Dow. We didn't really see the continuation, weren't really breaking down off of intraday support. So on a positive note, I don't think that this is a confirm just yet. On a negative note, it is a second day in a row of closing below that 50-period moving average and that old breakout point. So still do not like the Dow, and that's what really kind of, maybe technically at least, scares me the most. Below the 50, below breakout point, turning moving averages, not a lot of support really, until we kind of work back into that 200-day moving average. If we want to sell, there is room before we catch big levels or major levels of support in the Dow. That's the one that scares me the most, no doubt. And good afternoon, Lorena, and good afternoon, Amy. Good to see you. I hope you guys are doing fantastic. But we held our own in the Dow. And I think maybe on a day like today, after all of the selling and the big spike in volatility, I think maybe that's what we, if we're bullish at least, wanted to see, right? We didn't want a huge green candle, taking away any potential pullback opportunity, right? Maybe we'll take it, maybe we won't, but I'd like the option at least. So looks like we are at least fighting for that. Over on the NASDAQ, still think this is probably the best looking, one. Overall, we are hanging out kind of at that old resistance level. We are below those short-term moving averages, doji type of a day. Little bit of a concern that we're seeing that short-term 9 cross below that 20 SMA, but that does happen on deeper pullbacks. That's why I don't like them. I like it when the moving averages are stacked the right way. Rising 9 above a rising 20, above a rising 50, or if on the bearish side, falling 50 on top of a falling 20 on top of a falling 9. I don't like it when they don't do what they're supposed to do, right? It's not their fault, but don't love that. Would like to see it stabilize. I do expect technology to be the area that, from a pullback perspective, I like the most after going through some watch lists last night and here a little earlier today. We'll take a peek at a couple of them when we get into that sector. I think that's looking to me like the best pullback area, at least as of today. And hey there, Justin. Good to see you, buddy. Hey, Whitney. Hope you guys are doing well. Boring day, huh? We needed it. So I know some traders were a little nervous yesterday. Over in the I don't think we could say volatility's gone. We had a boring day. I don't think it's time to say, we're back to the April lack of volatility. But again, I mean, one thing that I'm sure you guys were noticing too is credits have taken a nice step up from what we were seeing in April. So for those credit trades, can't really complain about that spike in that volatility. Over in the rut, still just hanging around within this sideways range. I don't really think there's much to see here at this point. A break of support, down here at this 1555 would be a sell signal in my mind. A break above this top that we set up on Monday is the confirmation to the bullish side. I still believe in the rut. If this is a pullback, I believe the rut has a chance to break through that. But until I see that, I'm just going to say it's back in this range with a little bit of a bullish bias for me. But a break beyond that, I think you have to say that is a bullish signal if that's how it goes. So really not a lot to see here in the market. Just like I said, for me at least, I think the market needed a day like this. Just needed a day for people to kind of digest a little bit without having to quickly make the decision. Do I need to completely go bearish? Do I need to completely buy into this dip? At least we have a small bodied candle to make us make us feel a little bit better. Of course, that's going to mean a lot of the same things over in the sectors too. A little bit of a doji here on the materials sector. Much like yesterday, I've not completely given up on this sector, but I will if it breaks this support level, by the way, at 54. That is an area that I would expect to hold. And if that does falter, looking at a weekly chart, we've taken out the weekly trend. We've taken out the weekly 20 average. We've already broken below the 9. Too deep of a pullback in my mind for me to really like it. It is a deep pullback, and some traders aren't as concerned about them as me, but I don't like them. There's always something above me, right? There's, in this case, 200-day moving average, this old 56, which was a major price point, the short-term averages, the 50, swing high, just too much overhead. So taking more of a, slightly bullish as long as we're above this, but probably better way to put it is more neutral stance. I was really interested on last week as we kind of dojied at that price point, but with the gap down this week, I think it's kind of made those difficult charts to trade. And if I'm trading into this pullback, I'm going to be very picky. I'm not trying to find things that had super deep pullbacks. I want to find things that held up, relatively speaking, well, for right or wrong. We were able to bounce a little bit off of the energy over in the energy sector day. Not a lot to see here. I think we're kind of in this little mini, what are we going to do phase, right? We've broken that support zone. We've come out of this trading range. We've caught a little bit of support here. These last couple of days, we've got some falling moving averages. Looks like it's just in that wait and see mode. I will maintain a more bearish than bullish attitude as long as we are below this breakdown point. And I do expect that as we see this 9 kind of work its way down, that might force the issue one way or the other. But you do have to say that it's held up a little bit better after that break, which, the first day traders were clearly getting in. There was quite a big spike in volume when we first broke. It has kind of held up a little bit, maybe a little bit more than I would have expected, especially when you kind of consider the market conditions. So I think we have to be careful over here, but I cannot in good conscience say I'm bullish or even open to being bullish until we get back on the right side of this $65 marker. That could start to get me thinking about it, but really with this failure, I don't expect, seasonality is just kind of not there this time of year. Doesn't mean it can't run, of course, and I'll be open to it, but today, lots more interesting areas in my mind than energy. Financials just hanging around at that old resistance level, much like the market, kind of right below that. If we could see a little more upward movement, in the next day or two, could be a very interesting pullback. I don't think this is a place where, if I'm aggressively looking to buy into this dip, I don't think with just the technicals. I was running through some of the S&P companies before we got together. There's some interesting breakouts. That's probably how I'm going to look at it. If we do have a quick recovery, turning more to the breakouts, if we can kind of do a little bit of a dance, and hopefully we can over the next couple of days, some of those pullbacks should look a little prettier. And again, that's kind of the eye of the beholder thing. I understand that, but I wasn't really loving the pullbacks across the board. It was just a little bit choppier than I would like to, especially when I looked at some of the tech pullbacks and compared them fairly, I guess. It just seems like that was a little easier pullback area, in my opinion. But you still have to like it. We did hold, right? We hold that support. That is an important price, I think, for a lot of those stocks, to be honest with you. Over in industrials, just sitting on that 50-day moving average. Again, I'm not going to fault anybody for looking into the industrials if they are looking at this as a pullback, but this area can be a little bit more sensitive to the trade talk stuff. We have kind of, not terribly, but we've kind of violated this breakout point, and we're holding the 50. I'm okay with it as long as we're doing that. If that dips anymore, we really don't have some support. We saw Boeing break support yesterday. This is an area that I think we do have to be a little more cautious. I'm not going to be looking to aggressively jump into this sector. Get me back on the right side of that 77 zone, and then maybe we can start talking. But what that probably means is the pullback is for somebody else, if that's what it is, because by the time we get through there, probably had a little too much price movement on some of those companies. So it's probably whatever the next swing after that is for me in the industrial sector, which is unfortunate. And I really like how it was holding up, and I'm not turning on it just yet. I don't think you should turn on much of anything, technically at least, just yet. But I think we do want to still be a little bit cautious. Then there's tech, who's kind of sitting right on that breakout point. And this is the area that really jumped out to me going through things and just watching it, perform here today off of yesterday's low. Always love when we test a breakout point as support. And at least as of right now, that continues to hold for us. There were a few interesting pullbacks just in some of the big names as well. Most notably, I would probably say Microsoft, that's kind of sitting right between that 9 and that 20. Both of them are still looking fine to me. A little bit of a doji candlestick. Still think for me, I need a little bit more upward movement before I'm comfortable calling this a pullback. And I'm not really opposed to trading this pullback through out of the money credit spreads. So, that's certainly something that's been on my mind the last 2 days, as far as, if we see those pullback signals, how do you want to do it? I'm not opposed to trading the pullback a little more conservative through the credit spread market. But I really like where the pullback is. We had that nice earnings pop on Microsoft, still holding that 20, a little bit of a doji day. Apple, I don't know that it's a great I don't think it's the prettiest one. We are still kind of hanging above that previous swing low. Intel, the scary looking one, it terrible, response to its earnings and really ugly, in any market condition. I think Intel's chart has to scare you. Also have Adobe. Adobe was kind of sitting right here at that old breakout point, kind of like the ETF itself, right at those averages. So when I was looking at pullbacks, this was the area that really kind of jumped out to me the most personally. A few of these areas, good risk to reward. If we see those signals in an area that I still like, probably, if not the most, high on the list of the most. So the tech sector is actually looking pretty interesting from a pullback perspective, in my opinion. And I think that's probably where I'll be leaning towards in the next couple of days if we see some upward movement. Staples, still very open to it, but really would like to kind of see us push back through that 57 right now. I'm not overly concerned, but you guys know me. Lots of things can scare me. Or at least bother me. And so, I don't like that we are below that 57. That was a good break. We haven't taken out the support level, so I don't think it's time to change the bias on this sector at all. But I'm not opposed to making it get back on the right side of that 57 before I really get terribly excited about this sector. I will really like that. Right now, if we look at this on a weekly time frame, we still have some weak, right? All this is a little bit of a pullback after hitting an all-time high, not an all-time high, but a long-term high. It's been a while since we've been up here, still above the 9. That's a key component too. Things that are above the 9 weekly are going to look a lot more appealing in my mind than things that weren't able to hold that, like say material sector. That just is going to be a concern for me. So need another little bit of time, a little bit of a doji, not a lot of movement. If we continue to kind of be a little bit fearful but not tremendous selling, we might see some money move into this. Of course, one of the mid style, I think it's somewhere between aggressive and defensive. I don't know that it's purely defensive anymore in my eyes. Oh, utilities, they are interesting. That one is, we saw a lot of selling here in the utility sector today, working right back into that old breakout point at 57. And if this is the first time you're joining us, first of all, welcome. Glad to have you. Second of all, this was a major breakout point, and we've basically just consolidated since we broke through that resistance level. Probably a little easier to see it when you just look at it from a weekly perspective. If that floor gives out, I think you have to say that that is a bearish signal. What exactly that might mean to you or me or anybody else is probably vary from trader to trader. But I do believe if we falter on that breakout after consolidating for quite some time now, that would be a little bit of a bearish signal. If I were, trading, which I'm not, I'm really just kind of watching it right now. But if I were doing anything with the utilities, that would certainly be a point where I wanted to either, think about selling calls against long-term positions, potentially short-term swing trading, although I don't really think that this is an area that I'm going to be looking to swing trade. I do believe, though, this 57 area is very important for this stock. And when you look at the companies within it, like we've noticed before, they'll look, for the most part, they do look somewhat similar, where we are kind of rangy, but here on knee, one of the biggest components of this ETF, just hanging right at that support level, right? If that gives out, we have to wonder, is this a double top breakdown? I think you have to wonder. You have Duke, who they have their earnings, but we'll see how that impacts it. Already taken out that support level. So a lot of these companies are either hanging at support or threatening to push through that support. Now, these are utility companies. They're not traditionally the most volatile group of companies out there, but they can. We've seen them move together. There's no doubt. My problem is if this support gives out, just with the way that we've kind of moved, we don't have a lot of history for a couple more dollars into 55. Now, we have a lot at around 55, the 200-day moving average, some old tops. anything. We've been here before, so anything could end up developing as some support, but there really is quite a bit of clear air, as they say, if that support gives out. So I do think a break below that, we do need to be a little open to downgrading the utility sector. I've had them at 50, right smack dab in the middle. Surprise, surprise, during basically since this failed pullback attempt that we saw back, gosh, was that early April, that long ago. This is an important price. So we'll see where this one is tomorrow. If people buy off of it, it's not going to be me, but I get it. They did it last time. The risk to reward's going to be good. Hey, Wayne, good to see you. Welcome. The risk reward would be good. If I buy, obviously this is a tough candle to buy off of no matter what you're doing. But, if I'm buying at 57 with a stop loss a little below 57, I have resistance at 59. So from a pure risk to reward perspective, I can understand why folks might want to be looking into this area, but that is not my style whatsoever. If we see some support form, and we're looking at utilities, again, that's the tough part, but maybe there could be some credits with some spike in volatility, but I'm not going to hold my breath. Over in real estate, just another kind of day. I still believe these guys are sideways too. I think it's a lot easier to see it when you look at it on the utility sector, but I really believe that that's exactly what's happened here with the real estate sector after that nice little run. Again, that was maybe not quite the exact breakout that we saw over in the utility sector, but we saw a pretty good one not terribly long ago. So it is taking a little bit of a breather. Still don't think we can call it bearish as long as we're holding that breakout point. Still don't think I would want to call it bullish with the way it has been behaving. We've got some overhead all-time highs not that far away from us. So to me, same old boring day in the real estate sector. Still have it very, very neutral. I think it's easier to see it on the utility sector as of late, but I really think that's what we're seeing in the REIT sector as well. And lastly, over communication services, another one of those pullback areas, a little bit of a smaller candle here today, inside type of a candle. So could be another one of those pullback areas. I didn't check in on EA after the open this morning because I usually don't. I know when I'm biased, and I'm biased against some of the gaming companies because I think about them as a gamer and not a trader. And so I just kind of watch them and don't touch them. So, but we had a gap on the open, but boy, did that thing fill throughout the course of the day. And I think they gapped up about 6%. And that's kind of where I checked in on the open, and boy, it went the other way. There is no doubt about that. Still think I'm going to prefer tech versus communication services, even though they do share a lot of similarities. I think you could argue either way. Still believe that the tech sector's overall looking a little bit better, and it also makes more sense to me. So just a good day if you were looking at this as a pullback. A good day if you just wanted to digest a little bit, see what happened. Probably the only way you don't like today is if you were super bearish yesterday and expected it to follow through into today. I do think the market needed a little bit of a day like this. I think our job at this point in time is to be prepared for potential bull pullbacks and bearish trades as well. Maybe we do nothing with them. So yeah, I saw Matt J. Yeah, they really did a nice job. I think we need to be prepared, even if we want to take a cautious approach, even if we miss out, quote unquote, on this this pullback, if that's what it is. I think our job is to be prepared either way. Find some bearish candidates, find some bullish candidates, and maybe it's one of those weeks we just wave and say, good luck, everybody. We'll see you Monday. So, and it probably depends on what tomorrow does. If we see a small candle tomorrow, that might be something. A little bit of upward movement should start triggering some of those pullback type of trades in, but that would be a little bit more on the aggressive side. And yeah, Scott said, Matt had a real decent earnings report. I think they beat earnings, beat revenue, and if I'm not mistaken, they also upped their guidance a little bit. Really strong candle here today. I took a picture of him and sent him on the Tackle Twitter fairly early in the day. It looks like they ran even beyond that. So, it seemed more like a business as usual day. I still believe that that is most likely. We're going to look back and this was just kind of one of those, messy pullbacks that scared people away. But volatility's still here. Let's not get crazy one way or another. That's not what we do, though. We try not to get crazy at least. So that's where we find ourselves over in the sectors. There certainly will be pullback opportunities. So maybe you're like me and you like that tech sector for a pullback, but maybe you've got other areas that are interesting to you. There are going to be a lot of pullback candidates out there for us to peek at. And if we're still a little bit on the worried side, we can turn to those breakouts. There's still a lot of breakout patterns over in the stock and option report that just have not been able to get to that entry yet. That's a nice solid, wimpy way to play, this type of a market in my mind too, where, hey, we'll only get into things. How does that break resistance? Well, probably the only way these breakout trades are triggering is if the market rallies, pushing that stock through resistance, which would be a signal. So that's something I'm thinking about as we're moving forward as well. VIX, not much to see in the VIX, just we didn't really drop. We're still hanging in the same spot. So this was a boring candle, but we did see some movement, and there's still some of that fear, certainly relative to what we're accustomed to. We're not done with it yet, probably. So again, maybe we are, and maybe even hopefully we are. But regardless, probably the best way to view it is volatility is here until it's gone again. And so not really a spike here today, but certainly not a drop over in the VIX. I think everybody kind of probably feels like us. We want to like the pullback, but the violence of the pullback and the way that it's behaved, it has us thinking, man, pullbacks, it was so much easier in April. Maybe I need to just be cautious here. And I think that's kind of how the market's feeling right now from what I can gather. Over in the dollar, just another day, just kind of hanging around those moving averages, tempting people from a pullback perspective. Still think it's a little difficult, but a break above this week's high, I could see a more aggressive trader than me using that as an entry into this recent break. I still think I'm waiting for this end of week candle at this point in time. I'm looking for the break of the top of last week's candle in the body, as you guys know, of the original breakout candle. I do like that. I'm still waiting, and I will keep waiting probably into tomorrow, but it's probably starting to get more and more tempting for those pullback traders. I would imagine, at least, the longer it's almost, in some ways, it's like what we're seeing over in crude, right? We're kind of pinching down in between a couple of moving averages in a longer term bullish pattern. So not for me, not yet, but we are starting to see at least a little bit coming in as trader. Okay, let's take a little bite out of it here today. I think the break is probably the signal for me still. Didn't really see much in gold, but we did see some movement in gold here today. Briefly on that intraday, we were able to take out that previous swing high. We failed pretty spectacularly of holding it on the daily chart. As you can kind of see, did stabilize towards the end of the day. I maintain that this is a messy chart and something that I still want nothing to do with. Just too much above us, fighting harder than maybe I thought we should, when we first initially broke below 1280. So for me, it's still kind of a leave alone. Basically support down here at the same old boring number at around 1267 approximately, looking at resistance at this downward trend line. Now, if we can push through this, then maybe that next pullback could be something interesting, but the next swing has to happen. Do think you could argue a break to the downside? Do think you could potentially, although I don't think this is a good candidate at this point for a bearish retracement, I think you could argue it. I wouldn't be on board, but I think you could kind of argue it. But taking out that previous swing high has to throw a little bit of cold water on that, I think, if you were looking at this as a bearish retracement. It's one thing to work towards resistance. Even though it was intraday, it didn't hold. It did break through it. Still think that this is an area that, from a swing trading point of view, you just let somebody else have fun with it. You just cheer for the intraday traders who sold it at the top there and had a really good run the second part of the day. Over in silver, a lot more likely, in my mind, if I am bearish, as I said many times, this just looks like a better chart from a bearish point of view if I'm looking at this as a retracement. I'm not, but a little bit of downward movement. We've been able to, keep making these higher lows during this recent run. Certainly a fairly bearish candle here today. Somehow it just seems to always find its way back just below $15. And so yuck, and I don't want to try to fight that, but I could understand, we did create a lower low. That's true. We haven't, created a higher high. Still, for the most part, the bearish argument, I think, is intact still. So a little more downward movement, I could see why folks would want to go bearish. But again, it's the behavior. It's not that I don't really like that chart. It's that the behavior that we've seen in the metals market as of late, it just has not been very well behaved. And I would just rather not deal with it, to be quite honest with you. It'll develop at some point in time. Little downward movement, though. No one's like I said. I'm picky. I'm wimpy. I could understand some more downward movement being a trigger into this from a bearish retracement perspective. And again, if I had to play one to the bearish side, it would be silver over gold. Not because I like gold better than silver, although, well, yeah, who doesn't? But because I think the chart is a little friendlier from that perspective. Natural gas, really strong day here today. Good surge on volume, working right back into resistance. That was always my concern. I don't think this one's figured out just yet. So if you were looking at this on the bearish side and it had broke, or if you were like me saying, I don't think so, at least I'm not sold yet, I think we still have to work through it. But we had a really strong spike right up into that resistance. I think a break of that resistance, you have to call that a bullish signal. A tradable signal, I don't know. I don't think so. But I could be tempted, to be honest with you, if we do break that, knowing the greater context. We know that we're hanging on this support zone, right? Or hanging out at this long-term support zone. A lot of history there. If we do take out that resistance, we will have created higher highs and higher lows, right? That's a big if. It hasn't happened yet. We're back on the top of those short-term moving averages. Now, really, I think the case, that would be an early sign of a reversal, in my opinion, at least. That would be the first signal that I could, according to my rules, I could buy this if this closes above this resistance. According to my technical rules, I probably won't. We've got some overhead, most notably a pretty significant, although nothing compared to that support zone level of resistance, along with the 50-day moving average. I would just be looking at just watching it as a trend developer at that point in time. It would also be very early in the reversal process. So earlier, of course, better reward, but more risk, right? So we haven't broken through that today, but that would have to be a concern. If I were the type of trader, and you guys know we talked about it, was not interested in this as a pullback, but I did understand where that argument was coming from. Taking this out, I can only speak for myself, but I'd have my stop loss right above that swing high. And so I can't imagine why other people wouldn't either. Doesn't mean they wouldn't. I just don't understand why they wouldn't have it somewhere just north of that high. On the other side of things, from an entry point of view to the bearish side, we could, a break of this little floor could be a bearish entry. Not interested at all in my mind, but that does create another potential entry. If I did think this was a bearish breakdown or was a retracement and I was just a big wimp and I didn't do anything about it, I could talk myself into a break of support being an entry. As long as we don't take out this high point. I still think the best thing to do is let it fight. That was my concern early. You guys know that. This was a big level of support, and it's really, to me, it's just fighting at this support. And that's all that's really happening. When we put it on a daily perspective, well, candles are going to develop, right? But to me, I really think that our battle is just at this breakout point, and I don't think you can call it a breakdown. I've been very honest about that. It's going to be interesting, and the problem with wanting to get in so early if we do break to the upside is there's just a million things on top of us. 50-day moving average, old resistance, this 9 EMA, which on the weekly chart, which can be a real pain in the neck to fight against, in my experience. So not a great trading opportunity, but I would call it a bullish signal. A break and a close, I think you have to call it a bullish signal. And over in crude, lastly, really good day. It didn't really do a ton, up just shy of 1%, but we're starting to kind of build that little bit of a floor, hanging around between those moving averages. We know what this weekly chart looks like, and this is the pretty one, right? And we still need a couple of more days. And so I'm just hoping that crude stays in this range for 2 more days. And this is somewhat what our closing candlestick at the end of the week looks like. This looks a lot like, right now at least, a bull pullback on a longer term time frame in crude. Still have a couple of days. It could completely change the way this chart looks, right? We know that story. Crude can move. It also can be very boring. So holding up here today, I want to believe in this, because that's what it looks like to me as a pullback on a longer term time frame. Right now, we are below that 9. That's always a concern. I never want to fight against anything if I can avoid it. But fighting against that 9 EMA is not one of my favorite things to do. We need a few more days in this range, which is going to push this 9 EMA down a little bit and then force the issue. If this is a pullback, it's going to have to break above that, which can then, of course, become more of a support catalyst as opposed to a potential resistance catalyst, which is what we're seeing right here. As far as entries go, again, I think for me, it needs to finish the week in this range. But if I'm looking at entries, I'm probably going to start working into that hourly chart here on crude oil, and probably looking a break back above that 200 hourly as where I'd start to be looking in from a pullback perspective. On the other side of things, I think it's pretty clear that 60 is the support zone that we're working with in my mind. Old resistance, big round number, recent bounce off of it. We've all seen it. Play off of that in various ways. So for me, the support is above 60. Anything above 60, I have a hard time understanding the bearish argument. Below 60, I think that is a much different conversation. So I think in the short term, relatively speaking, and we know crude can go sideways for the next couple of weeks, right? But in the not too distant future, we're either going to kind of push through, starting to get potential entries into the bull pullback here, or we're going to break down, starting to generate a lot more sell signals on larger time frames. So I think patience is what we have to be employing with crude right now, because quite honestly, you say bull, I say bear. I'm giving it a coin flip right now. Maybe 1% bonus to the bullish side as long as we're above 60, but it wouldn't feel great about jumping in today. So, ladies and gentlemen, that's where we find ourselves after, especially relative. It's always relative, right? Boring day in the market, comparatively speaking. Big takeaway, really, we are getting that pullback opportunity if we want it, right? It's okay if we don't want it. It's certainly fine if we want to pass. We still are holding up just a little bit mixed signals, especially when we look at the Dow Jones. But then you look in things like the material sector, look at the energy sector. They're definitely showing some weakness. I've completely skipped out on healthcare simply because healthcare doesn't exist until the end of the week. So let's go back to it really quick. This is a really weird chart, like we said yesterday. So I completely, in my head, it's see ya on Friday night or sometime this weekend. But that's just me. Of course, last week we took out all of that weekly stuff, that support zone, all those averages. But then today we've worked right back into that range on that daily chart. The weekly close is what I think we're looking for going into next week. Right now, you want to talk coin flip. This looks like a coin flip to me. Buy or sell, flip a coin. You'll be right half the time. You'll be wrong the other half the time. There's just too much going on in this sector overall. About the only thing that really interests me are things that are breaking down below major levels of support, because there's not really a lot of things breaking through major levels of resistance. I would be open to them, but we're just not seeing a lot of that right now. So there we go. I snuck you in at the last moment there, healthcare sector. And that will be the end of you until Friday. So although we'll look at it tomorrow, because you guys may feel a little bit differently about it. So ladies and gentlemen, that is going to do the market recap for today. But as always, thank you so much for joining me. It is my pleasure. It's more fun to do this with you guys than on my own. And the way I see it, I have to do this on my own anyway, so I might as well do it with friends. So thank you so much for joining me. If you are new around here, of course, be sure to subscribe to the channel, and you can hit that notification bell to be alerted to anything that we've got going over here on this YouTube channel. You can, of course, join us over at Tackle Trading on Twitter. You can find me at FrankMartin23 on Twitter as well. Let's see here. We've got the Bear Market Survival Guide meeting going on here this afternoon for members of the Bear team. Pretty interesting time for that, right? We're not in a bear market, but we've seen a little bit more selling than we're used to. So pretty good timing for that Bear Market Survival Guide here tonight. No two ways about that one. If you are new around here, not a member of our team, of course, you know that you're always invited to join us for a 15-day free trial, but you're also invited to come join us over in our clubhouse. Just head on over to Tackle Trading, just hop on into that clubhouse, be part of our trading community. We never get tired of talking trading, right? This is I'm supposed to be having a break right now, and I'm hanging out at my computer because this is my idea of a good time. So maybe that says more about me than it should. I don't know. But as always, you guys, it is certainly my pleasure. So thank you so much for your time. Those of you, who are members of the Bear Market Survival Guide, enjoy that this afternoon. Those of you who aren't, enjoy your Wednesday afternoon. We'll pick back up, same time, same channel as usual here tomorrow. Let's hope for one more boring day. Then we can really maybe start seeing some interesting pullback opportunities. Fingers crossed, we'll see. So thank you all so much. You guys have a great afternoon. I will see you tomorrow. Bye, everybody.